This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. China's commodities markets suffered through a turbulent year in 2021 as an energy crunch and subsequent government intervention roiled the prices of products from thermal coal to urea, whipsawing them from record highs to monthly lows in weeks. Still, the market is broadly set to end the year higher, notably tin, edible oils and thermal coal, though a second year of wild swings and sharp gains are unlikely amid expectations of more subdued economic growth. Factors such as the economic cycle, high inflation and mutating viruses exacerbated the volatility of commodity prices, said Wang Xiao, lead researcher at Guotai Junan Futures.
Top oil exporter Saudi Arabia may implement deep price cuts for the crude it sells to Asia in February after Middle East benchmarks and spot prices slumped this month, industry sources said. The producer is expected to cut official selling prices, OSPs, of all grades by more than $1 in February from the previous month, dropping prices back to their lowest levels in 3 to 4 months, a Reuters survey of 7 crude buyers showed. This comes after spot premiums for February loading Middle East and Russian grades fell by more than half this month as tight supplies eased following higher output from the Organization of the Petroleum Exporting Countries and their allies, a group known as OPEC+, and oil releases from strategic reserves at top consumers.
Moving on to the top news in the energy sector.
Russian Deputy Prime Minister Alexander Novak said on Wednesday that OPEC+ group of largest oil producers has resisted calls from Washington to boost output because it wants to provide the market with clear guidance and not deviate from policy. The United States has repeatedly pushed OPEC+ to accelerate output hikes as U.S. gasoline prices soared and President Joe Biden's approval rating slid. Faced with resistance, Washington said in November it and other consumers would release reserves. Asked why OPEC+ rebuffed the calls, Novak said OPEC+ had a long-term vision.
Oil prices edged towards $80 per barrel on Wednesday as global supply outages and declining U.S. inventories offset worries that rising coronavirus cases might reduce demand. Brent crude rose to as much as $79.20 a barrel earlier before retreating to trade flat on the day at $78.94 a barrel by 10:55 GMT. U.S. West Texas Intermediate (WTI) crude edged 13 cents lower to $75.85 a barrel, having climbed to $76.17. Both contracts are trading near their highest levels in a month, aided by the strength in global equities.
Next, we have the top news in metal markets.
China aims to cut energy consumption of steel by 2%, and to lower carbon emissions in the aluminium sector by 5% by 2025, the country's industry ministry said in a raw materials development plan on Wednesday. The country will also strengthen the exploration of domestic iron ore and copper resources, and support the development of recycling metals to enhance its resource self-efficiency, the Ministry of Industry and Information Technology, MIIT, said. The MIIT said China's steel, cement and key commodities capacity will only decrease by 2025, and it would explore staggered production mechanisms for the steel sector.
China's top copper smelters kept floor treatment and refining charges, TC/RCs, for copper concentrate in the first quarter of 2022 flat from the previous quarter, 2 people with knowledge of the matter said on Wednesday. The rates were set at $70 per ton and 7 cents per pound during a meeting of the China Smelters Purchase Team, CSPT, held online on Wednesday, the sources said. The new rates are 32% higher than the $53 per ton and 5.3 cents per pound set during the same period a year earlier. We will now look at the top news in the agricultural sector. Malaysian palm oil futures fell on Wednesday, as rival oils weakened and traders booked profits after prices rose to a 2-week high in the previous session. The benchmark palm oil contract for March delivery on the Bursa Malaysia Derivatives Exchange had dropped 1.59% to 4,696 ringgit, $1,123.44. It rose 3.56% on Tuesday, but slipped 0.5% in overnight trade. A Kuala Lumpur-based trader said palm prices may cool off, given the high selling interest after big gains in the previous session, while Anil Kumar Bagani, the research head at Mumbai-based Sunvin Group, said the rally in the past few days encouraged investors to take profits.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.